I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter.
What do you think is the secret sauce for Bar Down Investments? How do you feel like that you guys really anchor your particular skill set, your focus, and multifamily, I believe, is what you guys focus on, and how you protect your investors?
So the origin of the name Bar Down comes from a shot in sports where you hit the top of the crossbar and then the puck or ball goes in the net. It's a high precision shot that takes a lot of reps to be able to achieve. And that is our whole business model for Bar Down Investments. So essentially, we're not a volume company. If you're looking to invest all the time and throw capital in a passive investment quarterly, we're not the company for you. In fact, we've gone 3 years without an acquisition because we just over scrutinize investments. And I think that positions us very differently than everyone else, because a lot of other companies built their business model around volume. So the overhead of staff is supplemented through acquisitions and through fee structures. We built our business on a completely different model so that we wouldn't need this high volume of transactions to grow our company. It was more based on our ability to execute on a quality basis. So everything we do is centered around that, which it's kind of less is more, less assets actually, but stronger performing assets is something that we really pride ourselves on. We've never had a capital call. That is very unique, especially in this environment.
Yes.
But that's something that I think people are really respectful of. And if I can just add one more thing,
Please.
Without being super long-winded, which I already have been.
You're good.
One thing that set us apart is we don't really care what the masses are doing. So we stopped distributions super early on. In fact, I can't even begin to tell you how angry investors were when we turned off distributions across our assets. And we did it at least 6 months, if not a year, prior to everyone else doing it. And the writing was on the wall, and it's because we are so detail focused. We knew and saw the rising interest rates, the insurance, taxes, and we knew that there was going to be a catch-up period. And we didn't want to do a distribution to then turn around and do a capital call, which a lot of folks did. So nowadays, investors are singing our praises, saying how smart we are. I don't know if I would attribute that to being intelligent or really centered on the fact that your number one responsibility when taking investors' capital is to protect that capital. How you do it is through operating successful ventures, but your number one responsibility is to protect the capital. And then as long as you do that well, you can obviously return it with friends, distributions and profits.